This segment is sponsored by Corebridge Financial. Gain access to a comprehensive life insurance product portfolio, actionable insights, and proven tools to help you deliver solutions for every stage of life. From one of the largest and most established U.S. life insurance providers. Visit CorebridgeFinancial.com.
Okay, we're ready for our segment with Corebridge Financial. Talking about the demographic shift that we've talked about a number of times in this podcast already. More than 11,000 Americans are turning 65 every day now. If you think about it, most people do not have pensions at this stage. They're working off of their retirement savings and Social Security for funding their retirement. Today we're going to talk about some solutions that really can be taken advantage of early on in the process. And to help us get into that, we get to welcome Joe Ross, Vice President, Sales Productivity and Business Development at Corebridge Financial. Welcome, Joe.
Hey, thanks, Chuck. It's always great to be with you. And you're right that preparing for retirement is a climb up a hill that just seems to be getting steeper and steeper. And I'm eager to share some thoughts about that with you today.
Yeah, I encourage everyone to read Joe's article in the May-June edition of Aspire. Can life insurance help solve retirement's biggest challenge? And Joe, I'll just have you start there. Give us a sense. Annuities are more frequently used these days, but we want our audience to be thinking about what you propose is using life insurance to fund that retirement income gap. So let us know more about that.
Well, Chuck, of course, one function of annuities is generating guaranteed lifetime income. But the surprising thing for many clients, and maybe even for some financial professionals, is that life insurance can also deliver a powerful, effective option for long-term retirement income. Let me offer you just a couple of details here at the start. Now, to be clear, when we think about life insurance, we need to first remember that death benefit protection is the primary purpose. But from there, we can also talk about modern life insurance and how these policies can be designed to build cash value. More specifically, financial professionals can find a few index universal life insurance policies out there with riders that allow policy owners to utilize the policy's accumulated cash value to create guaranteed annual policy loans for the rest of the insured's life. It's these guaranteed loans that create a defined income stream, a guaranteed income stream for life.
Those are great points. Those guarantees really do set the stage for a much different and more positive outcome for retirement. There definitely are some best practices, I assume, for which clients that this fits best with. So talk about those best practices with us, Joe.
Yeah, ideally, these policies are structured from their inception to optimize the cash value growth. Now, the amount of guaranteed income is dependent on the cash value in the policy when the rider is triggered. So that's the variable. We don't know how much guaranteed income the client is going to receive until we know the cash value we're working with at the time the rider's activated. So an important message to deliver to clients would be this. Supplemental retirement income using life insurance develops over time. You can't put in a lump sum today and start taking income tomorrow like you can with annuities. It generally takes 15 years or more to properly fund a life insurance policy to do this. So the types of strategies we're talking about today make the most sense for clients in their 30s, 40s, and 50s.
When you think about it, Joe, how should advisors really evaluate which clients are best suited for this type of strategy?
This is where it gets really cool and different from what we've done with life insurance in the past. At the time the client is ready to retire, the client gets to decide whether they want to select guaranteed or non-guaranteed income for the rest of their life. If they choose the guaranteed income for the rest of their lives, the software solves for guaranteed income to age 120 or death, whichever comes first. If a client reaches retirement and they're not in very good health, they may opt for the non-guaranteed income, which would allow them to take more out of the policy over a shorter period of time. But if a client is healthy when they reach retirement, the guaranteed income becomes very attractive. And as frosting on the cake, if they opt for the guaranteed income option, they can choose guaranteed increases that occur every year for the rest of their lives to protect their purchasing power from the ravages of inflation. These guaranteed lifetime income riders can be a game changer, Chuck.
Great message, Joe, and I think it's really important for advisors to pay attention. You need to make sure you're keeping up with all the options that are available Joe talked about a great one today with us, and really appreciate you and Corebridge Financial, Joe, for being part of our program. Thank you so much.
Hey, thanks, Chuck. And I really appreciate what you and Aspire are doing to keep all of us on the leading edge.
You got it. Have a great day, Joe. Thanks so much.
You can find Joe's article on page 20 of the May-June edition of Aspire magazine. Link in the description.